So Hamish set out a pretty compelling case there for New Zealand's own satellite city. I don't know what it worked out at per hectare, but it's not $10 a hectare like Springfield is. Maybe, Ross, do you want to kick us off with some of your thoughts on the case for a satellite city in Auckland?
Yeah, it was an intriguing presentation from Hamish, and I really enjoyed it. It's actually not too far from the directions that we're planning to go. There's been a bit of discussion about plans and whether we have too many of them. I take a slightly different view on that. I think that we do have all of these plans, and they're actually an endowment. The problem is actually not in these quality plans, the TFUG and the FULs and all these other things for the future. It's actually getting the funding that enables this development to occur. And I think everyone is in vigorous agreement on that. And really, it's just a case of let's get on with it, as far as I'm concerned. But
from what you saw there, is that a compelling case that you could take to get the funding and the financing?
Yeah, absolutely, because it talks about scale and it actually and it interrogates the data and it follows what the data is telling you to do, and therefore it seems to have all the hallmarks of reasonably clear and good thinking. And the other thing about it, I like that some thought has been put into a solution, because we're in a bit of a Tower of Babel environment at the moment, where you've got hundreds of different ideas being thrown around, and it's lovely to have a contest of ideas, but let's just start focusing on the things that we actually have to do, because we don't have the luxury of time anymore. The position with housing in Auckland and the position going forward with transport are both a disgrace. They throw out massive negative externalities, and those negative externalities are equal to the upside of investing. So, we just have to get on with it.
Karl, did you have a view after those two presentations?
Yeah, and congratulations, Hamish. Very good report. And I'm not an urban planner or city builder. I'm only a lowly banker. But one thing that really intrigues me is numbers, and I think Hamish brought that out really well. When you look at different places around Auckland, to fully cost the cost of delivering infrastructure in those places and delivering, what we need. The other thing, which he didn't cover in his presentation, which is in his wider presentation, is around key sort of anchor projects, if you were to put them in those areas, because I think the true success of a satellite city is to keep the people in the city, to have them employed in the city, educated in the city, and maybe they go every now and again to the CBD or something like that. But if you really want to take that pressure off the transport network, you've got to keep them in. And again, like the Springfield example, Hamish looked at things like hospitals, education, institutes like that. But and then probably the last point, I guess, is the one you brought up yourself, Nadine, is that cost of land. That's really what's making housing unaffordable in New Zealand. Yes, construction might be a little bit more expensive than it is in different markets, but it's that real scarcity and trying to break that model, which hopefully something like the Pirata City example has a chance of doing that.
I'm wanting to ask you, Russell. I know you talked about how important the $10 a hectare figure was in getting you guys started, but the anchor projects, what comes first? Is it you build the houses and you convince the companies to provide the employment, or do you get the companies in to set up shop there and then you build the houses around it? I mean, what order does that happen in?
Yeah, so I guess from our point of view, you've got to grow the demand for the services. So you've got to build community. It's really quite interesting. Just down the road from Springfield, the government's come in to facilitate the development of the next valley down the road from Springfield as part of its growth management strategy. And the government's facilitated that. And they've designed it for 120,000 people around a core, central business district. But they've said, we've got to build the core first. And it's a bit of a question, well, wait up. If no one's living there, who's going to use the core? So our concept was pretty simple, but it was about planning for a series of suburbs around a core, make sure you provide a diversity housing product across a range of different price points, provide access to that affordable housing. The population comes, it brings the demand for the services. The services then create the jobs. For us, the big issue has been to hold to that plan. For us, the challenges of being able to fund the infrastructure that goes with the project, many times could have seen us just decide, the vision for a central business district, 390 hectares of land, at $1 million a hectare, now for residential is quite an interesting one if these people decided they wanted to retire, but we haven't. We've held to that principle of creating something different. So plan long term is a key part. Grow your community that brings demand for the services. Then understand when you're going to provide those services and plan for it. I guess the other thing too is just that what was really interesting with the economic assessment was done was to understand all the costs that are remitted back to government, through the project. I mean, part of the secret with Springfield's success was that the government never revalued the land for 15 years. The biggest cost we have now in our project on an annual basis is about $30 million worth of land tax and rates to preserve the stock that we'll want to build on in the future. So we have to do $30 million worth of trade to preserve the opportunity to do what we want to do in the future, because the price on our land has grown to the point where those fees and charges from government are a perverse disincentive for that. So in the economics of it, you need to look, if you're talking about facilitating from the government's point of view, just not about shifting costs, it's about sharing that cost, sharing the risk, and then how you actually give a soft entry into it, so that you can collect and create the war chest to provide the key pieces of infrastructure as they're needed further down the path.
Forgive my ignorance here, but the people living there, are they still paying rates to the local government, or is that funneled through you?
No, they still pay rates to local government. So
right.
Government loves us, the Ipswich City Council, because we come in and we provide all the infrastructure, the roads, the water systems, the sewer network, the open space, give it to them for nothing, and then they charge the community through rates to maintain that infrastructure. What we've done is hold on to the capacity within that. So we built the water and sewer networks, but we retained the capacity within the pipe. And over time, having educated consumers to use less, there's more capacity, which means we don't have to increase or duplicate the network. So we designed an original network for 40,000 people that can now accommodate 138,000 people, because instead of consuming 450 litres of water today, they're doing 180 litres per day. The surplus capacity within the same infrastructure.
So Ross and Karl, did developers have the room in their balance sheets or in their kind of profit and loss models that they could provide the infrastructure themselves the way that they have in Springfield?
To a point, the development contribution system is not very well understood, and it's a sort of a key counterpart to the whole way that local authorities are required to do their funding, and the LTP, which obviously Auckland is about to go in, and then the kind of allocation among the funded projects over that period. So really, a lot of what we're trying to do in terms of changing the game and innovating and so forth is to reach out into the longer period, the 30-year Auckland plan, the future urban land strategy, and all those things, and get things funded that should be happening now but can't be happening now because Auckland, because of its growth arc, is stuck in a pay-as-you-go trap. Now, that trap is entirely of the making of its funding structures at the moment. So, you've really got to look at that part of it that is broken and work on that part. This notion of, why don't we just revisit this whole thing? Why don't we do 1989 all over again? Well, here's my answer to why you don't. Because that doesn't get houses built today, right? And, back in 1989, we had 400 local authorities. We now have, arguably too many, and there was an interesting chart about that this morning. But let's understand that the biggest one is Auckland by far, 50 billion balance sheet. I think the next biggest is about 8, and that's Christchurch. So, let's just forget about stuff that doesn't matter on this journey. Focus on the stuff that we have to do, because it is simply unacceptable that the low middle income earner in Auckland is spending something like 55% of their after-tax income on housing costs when it should be more like 20 or 30. Now, so in other words, you fix this. One of the externalities there is the world's largest tax break for those people who richly deserve it.
It's always difficult. It's always difficult talking after Ross. But I mean, we sort of have a little mini example in Auckland already, which is sort of the Hobsonville Point development. I mean, you haven't got the developers are putting in some of the infrastructure, but to be fair, a lot of the other infrastructure is the water cares, etc., etc. So your original question, yeah, there is an ability there. The interesting point I took from the Springfield example is your ability to attract capital from offshore who look at these opportunities in a different perspective, and maybe that's another opportunity that we haven't looked at that in a pro rata example as well.
Dennis, I'm just wondering from an urban design perspective, and I guess a planning perspective, if our planners have failed us so badly with the plans they've put in place, what hope can we have of a master plan being better executed?
Well, hello? I think I like what Russell talked about with the vision, and I think every project, whether it's planning or design or economic or political, should really start with a vision. And I think if that's aligned across all levels of government with private and the community, then you've got a starting point. I think if you just start with saying I've got a plan, then there's a million different ways to do some planning. So I think for me, anything starts with a very strong vision, and then you can work into the pre-planning and pre-planning once you have agreement, and funding or financing is also significantly important to all that. With what we've talked about with Auckland and satellite cities, my view as a planner and designer would be that, and I alluded to that before, where I think you'd really have to work hard at also making the infill parts of Auckland work. That would need to be done. Very, very strong partnership between government and private. That would be all levels of government. That would be with new public transport projects, developing higher density around stations. There's also infrastructure that's not transport related, but where there is capacity in power or water through a city, that's where you would typically do development that's less expensive. Don't do it where there's overcapacity. I don't know where that is in a place like Auckland, but in theory. So I think it's important to work on that. And also, just putting my futurist hat on, with the future of cities changing significantly, say autonomous vehicles being with us in 25, 30 years, that will change the way our cities will work. Our streets will be different. Car parks you don't need anymore. So what do you do with that?
Well, how do planners then keep up with, we don't know what the future is going to look like.
I think just like everyone else, you're just running hard at the moment because technology is going so fast. I mean, if you also looked at the Amazon example, when that takes off, and it will, whether it's Amazon or whatever, then your major department stores in cities, for example, won't be that anymore. And so I'm not talking about now because I understand there's an urgent issue in Auckland now, but don't forget that in 25 years plus, that there potentially will be a lot of infill area ready for development. And then, obviously in the satellite city argument, that was really good work that's been put up, and firmly advocate doing that on rail corridors as opposed to road or light rail.
From what I understood from Russell's presentation, you've spent about $12 billion to date. You will eventually spend about $85 billion, so you're only about a quarter of the way there. Are we just all too sort of short-term-isms to focus on something with that long a delivery timeframe?
Absolutely. I mean, yeah, decisions are made on political cycles. That's the reality. I guess, you know, from our point of view, you know, we've taken a very, you know, basic sort of vision, which was to build a city with all the parts in it. And we've said we need to structure that so that it can respond to the context of the time. As I keep saying, 25 years ago, the context was very different, you know, to where we are now. Will be very different to what it will be in the next 25 years. So we had to set a vision that was not so much about, you know, the detail, but more the principles. So it's about live, work, learn and play in the one location, which is what I call planning 101. You know, I mean, I often go and lecture at universities and they say, you know, this must be amazing what you do, you know, putting planning in practice. And I said, well, the planning, you know, has been consistent. You know, someone needs a place to live. They need a job to go with it. They need to understand how they get around the place. So this is the infrastructure that needs to be provided. What I spend most of my life doing now is dealing with political science, negotiations, and those sorts of psychology sorts of issues. You know, how do we preserve what we've got, get people engaged to understand the challenges about managing growth, and, you know, and then get them to commit towards doing something a bit different. I mean, you know, the number of conversations we've had with people that say, well, we can't trust the developer to provide the infrastructure. I said, look, you know, we're not making profit out of it. We're providing it to actually support and enable our community. So, you know, for us, we've taken the obligation on to deliver it because we believe we'll do it just in time. We'll do it very cost effectively. But what we do need is certainty of being able to do that. So the process is never the outcome. It's about a place for the people. So you need to plan long term and have the courage to stick to it.
I think it would be fair to say, wouldn't it, Ross and Karl, that there's a general sort of distrust among the general public of developers? That relationship could do with some improvement so that people feel like we can trust developers to deliver the kind of outcomes people are looking for.
Well, we've thrust developers into a boom-bust cycle and therefore they go bust. Okay.
Yeah.
Blame the developer for that? You know, we just need to do things better. And look, we're really lucky in New Zealand. We don't know how lucky we are, the late and great John Clark said, and it is so true. We are lucky to have the Productivity Commission. We're lucky to have Infrastructure New Zealand. We can get our whole industry together here and talk. And there is a camaraderie in this industry. We're prepared to listen to the ideas of others and sort of coordinate those and pick the best idea and run forward with it. But what we just haven't done is put this all together to solve the problem yet. You know, do we have it within us to do that? Look, blaming the developers, what a waste of time.
Yeah, I think Ross got a point with the developers around that whole boom and bust cycle, and one of the things, I mean, that's been New Zealand historically, and that one of the things it does in the boom times, you need to take more margin as well. So it makes things more expensive anyway. I mean, going back to Hamish's report, one of the models he talks about is effectively a model where, which Hamish and I talked a lot about, with a model where the government takes the land and then, like Hobsonville, then feeds the land out to the market. I mean, I'm a personal big fan of that because I think that really helps the boom bust cycle, because then what you say to a developer is you're saying, these are the number of houses that are going to be delivered each year. The value of those houses in the market we can play around with through the value of the land. So you know, as a developer, well, you don't just have to do 1,000 houses and get them away and get them done. You know you can just do 100 houses a year, every year. You can get your workforce for that. You can make it more, repeatable, that sort of thing. And that drives efficiencies, and it drives our margins as well. And at the end of the day, I mean, there's two things that are driving this. I mean, Hamish explains the transport, but the other real thing driving it is affordability. And if we can keep driving that down through efficiency, then I said it's a great outcome.
I wish we could discuss this further, but we're running seriously over time. So if you could please put your hands together for our panel.